And just like that, we are back at Rick Helps Real Estate Show with Pat. What's my rate, McMasters? How are you this fine day?
I'm doing good, buddy. How long has it been since we really had a show? I missed you.
Thursday afternoon. I'll bet it's been 3 months at a minimum. I mean, we squeaked in a couple 3 o'clock ones.
Yeah,
But
I know.
coming back at our regular time, Thursday at 5, no, we've been MIA. So the millions and millions of viewers found something else to do.
I know. That's probably the problem with this world out here. They needed us to kind of put it all together, figure out what's going on.
Well, right now, there's just a lot of things to worry about, isn't there?
Yeah, I mean, your parts, your titles, anxiety in the Arizona real estate market, and it's quite interesting. I've been doing it 20, number of years, 26 years to date myself. I mean, it doesn't mean. I saw a meme the other day. It says, "I don't care how long you've been in business. I want to know how good you are." Doesn't matter. But I mean, this last several years, I've seen a lot of markets. When I was a stockbroker, 87, saw the crash. So I've seen a lot of markets. But this, boy, I tell you, I've never seen a market where it's so day to day. This war is taking everything day to day. I mean, there's so much news out there. It blows my mind how distracted people can be now in terms of trying to buy a house. What the anxiety, what should we worry about? The jobs, interest rates, gas, oil, inflation. There's a lot that's coming out. There's a lot that's coming out at people right now.
It's interesting, though. It's not changing a lot of metrics like you would expect it to.
No.
I mean,
it's weird.
Even our active listing count, when you look at this, it's just hugging right along where it was last year.
Yeah.
Right there. That's
the crazy thing about it.
Deja vu all over again. And then you look at prices, and for most of the valley, we're kind of flat, but it's city by city. And so you'll have some that are up 2% and some that are down, 19. And so trying to give a general overview of the Phoenix market is impossible at this point.
It really is. It really feels that way because everything is so bifurcated in one area to another. I mean, just even on my end, I was talking to another loan officer, Randy, and the office next to me here. I'm in the office, been coming in the office because I enjoy it. But he said there's there's agents that are doing great.
Yeah.
And there's a lot of agents that are just sucking wind.
Yeah.
And I get the sense there are homes selling, and him and I were talking this last night. Homes are selling. Homes are coming off the market. They might be on the market a little bit longer, but it's not like we're in this total malaise, but it's just the water is very murky.
Well, I'm sitting here looking at, and you and I talked about this yesterday, the listings canceled per month is climbing back up again. And we heard yesterday that of those listings canceled, 25% of them are canceled because of the BINs, or the buyer's inspection report. And I see that a lot. And It's unrealistic expectations on both sides, buyer and seller. The buyers want absolutely everything fixed. I mean, I had one listing where the door would not stay open, the bedroom door. It would creep close. Got to fix it. Good. Put a shoe on it. It's everything. Well, if I'm going to pay this much for the house, everything's got to be perfect. I understand the feelings for it, but the reality is there's always going to be something wrong with a house, even a brand new house. The only difference is the brand new house, you get a warranty. And sellers, we talked yesterday, it's a good idea to get a pre-listing inspection so you can see if there's any big stuff out there. They don't cost as much as the inspection that the buyer pays for, but it's a good idea to have an inspector come through and see if there's anything that might knock the wind out of your sales.
If you think that, you and I talked about it, I talked to, Randy, the gentleman I just mentioned, and he said, that's a great idea. I mean, you really don't hear about that because basically people are going under contract, then they're getting the inspection report. The sellers might know there's going to be some things wrong, but, maybe is it worth it to the seller? Like I said, we're just spitballing this. I was just throwing this out at Randy, and I mentioned this to you yesterday when we were talking about maybe getting your own inspection report. I talked to Dylan, obviously, and he mentioned a few things. Sometimes there's good and bad to it. As far as the seller finds out something, do they have to disclose? I don't think they have to disclose it, do they?
You have to disclose any material fact.
Material. Yeah.
Yeah.
Okay. Yeah.
So
material.
if you know there was a leak, you have to disclose it, and it's done on the form. It's called the seller disclosure form. They used to call it the SPUDs. Now they call it the clue.
Yeah.
Not the clue, but
we
had one.
In terms of big, small stuff, maybe some stuff, maybe you could clear up, maybe you could, with the inspection report, you could do some things that, you might cause a little bit of an issue, to the buyer. But, I'm surprised that more people, have you really heard people doing that at all? Getting an inspection?
No, it's not a popular thing.
Yeah.
They're more towards, well, I'll give you an example. We had a lady down in Sun Lakes, Jessica and I took on our listing, and she kept telling us, I'm really worried because they're going to say I need a new roof. I looked at the roof and I said, man, it sure doesn't look like it. Oh yeah, look up there by the air conditioning. Well, that's just one shingle because they did some work on the AC, but your roof's fine. Oh, I don't know. I said, has anybody told you need a new roof? No, but I'm pretty sure I'm going to need a new roof. And so I said, well, let's just wait until we get an inspection and let's see what they say. And then we can bring a roofer in to take a look at it. So we had the inspection. It's time for the walkthrough after the inspection. The buyers were still there. And our seller walks in, and she walks in when the inspector was gone, but the buyers were still there talking to Jessica. First thing out of her mouth, did they say anything about the roof? And the buyers backed out. They go, I don't know about this lady. It's like, there's nothing wrong with the roof. What are you doing here? And it just right out of it, all this thing. And they looked at her and thought, she's not going to fix anything, so we're not willing to go forward. There were some things wrong with the house. Doors wouldn't close properly. There was stuff. There was stuff going on with the pool pump. And they knew, because of her body language and what she was saying, that she wasn't about to fix anything. And we couldn't sell that house to save our life. I'm looking at our average price per square foot, list price, and you can see that it's down here slightly higher than last year, not by much. We're having our seasonal trend down with list. Everybody's optimistic right here, right? January, February.
Yeah.
It's a new year. Everybody's going to give us what we want. And then they find out that didn't work. And then it starts creeping up as you get into fall. And then it, levels out. But there's nothing, despite all the gloom and doom and anxiety and everything, it's not affecting this by much when you compare it to last year. Yeah. Now, if we go through and look at some of the gauges here, sales price per square foot, annual appreciation, total market, up 2.6, and 1.2% on annual appreciation change from the annual average square foot. This is a monthly average on the left here. Not alarming. It's not crash territory. And I think the reason that is you look down here, we got 2,600 new listings and 2,593 new contracts. So they're pretty even. And so if there was a wide disparity between the two, this gauge would look a lot different. The Cromford Market Index is kind of showing you that supply's in the yellow zone. The market index is overall red. Demand index is red. It's slow, but it's flat. Mm-hmm. So it doesn't have these big oscillating numbers up and down. And you got the bond market freaking out, 5.3%. Stuff going on with Japan. But what's the effect on that with rates, Pat?
I mean, it's been, it's day to day. I mean, flip to, it's been really, really just day to day, week to week. I mean, if you look at, this is the 6-month chart on bond prices. Bond prices go up, rates go down. So if you look at it, bond prices going down, bond prices are going down, rates are up. Rates are, obviously bond prices are going up, rates are down. You see within this 6 month, look at the gyrations that we're seeing in the 6 month Um, right all the way up, down, up, down, up, down. I mean, we're just seeing it all over the board. We saw rates obviously, end of February around 5.996. They're around 6 3/4, 6 7/8. And you see right here, this is a 6 month chart. This is the 10-year Treasury, which right now 10-year Treasury, you can look at the 5 and 6 year, the 5 and 7 year bond too, as far as really tracking it. But we've been just a steady, staircase climb upward, where we'll have a couple of days where we see some improvement, and then maybe a couple days, but then we see a rise in rates again. So there has been no trend,
Yeah.
within a period of time. I mean, if you go under contract in 30 days, you might see a little bit of relief, for the most part, maybe in a couple of days, where you can lock something that might be 30 or 40 basis points better. Lock it, because within that 30 days, you're going to see different gyrations. And I just don't see any overall trend that we're going to get out of this thing for quite some time. It's been really a circus since February. One day we hear the war is on, the war is off. So it's certainly causing some pain and angst, if you're trying to buy a house. But I think people just have to say, hey, this is the rate. It's going to be the high sixes. And I've been trying to tell people, is it going to knock out the borrower that's on the edge? Yes. But overall, what I'm seeing is people are buying that just want to buy, or they have to buy, or they want to buy. They're just doing it. They're not worried about, okay, rates are here. Because as I've mentioned to in a couple shows, I've said, if you lock in at 6 3/4 and they go up to 8 3/4, you're happy. If they stay the same at 6 3/4 forever, okay. If they go down, you can refinance. So really, it comes down to, can you afford it? It's really been an affordability issue.
Well, I think we're going to be this way for a long time. I think we're going to have a terrible summer in volume, but our prices aren't getting hammered. But people are finding some give and take on listings, on prices. Everybody's writing aggressive offers, and some people are taking it. And the sellers, they're accused of being greedy and stingy, but yet the seller contribution rate's the highest it's ever been. It's 57.8%.
Yeah.
They're and they say the average is 10,000, but it's actually more than that.
I think it's more than that, because I'm seeing some concessions of 12, 13, 14, 15,000.
Yeah. So they're pricing their house, but they're buying your rate down, or they're helping you with their closing costs. And, almost 2/3 of the listings are doing that now.
Yeah.
So that's helpful, I think. But I heard somebody talking to Dale I respect, and he said, we had a 10-year appreciation in prices happen over a 2-year period.
Yep.
He said, it's going to take time for that to shake out.
Yep. That's exactly right.
Doesn't mean it's going to turn around right away and come back. He said, it's going to take time. And he said, and next year is going to be slow as heck too in transactional costs. And he goes, so some realtors they're just going to bail. And then the industry is going through all of this consolidation. Keller Williams buying brokerages, Compass buying brokerages.
Yeah.
Rocket Mortgage buying Redfin.
Yeah.
Zillow is trying to look at acquiring some stuff, and they just can't seem to stay out of court. They're being sued again, a class action lawsuit. Compass suing Zillow, Zillow suing Compass. It's a mess out there. Now, small brokerage like Barrett, I don't even notice it or feel it. And I don't think the consumer does either. It's like, who cares?
Yeah.
Most people, when you ask them what brokerage it was that they listed with like a year from now,
they would
couldn't
know.
tell you.
No, they could care less. And it's on the same way with our company. I mean, basically, they remember me. They might, but Price Mortgage, we've got a good reputation around the valley, but for the most part, they can't remember the company name.
Well, then United Wholesale Mortgage, I mean, they were almost listed as a penny stock this week.
Yeah. That's going through some interesting times right now.
So things are changing. There's a move with the big brokerages trying to acquire smaller brokerages to get their data, to get their clients, their customers, and get them into their system and use artificial intelligence to keep them in the loop so that they can modify their mortgages, sell them insurance. So there's a big battle there trying to gather, and that's what made Redfin so popular for Rocket Mortgage to buy them, because they have all this data, all these people, and they can say, hey, refinance with us, go with Rocket's, lending services. And then you got Zillow that's got being sued because they're telling agents to steer people towards their bank, and clients don't feel like they're getting a choice, and real estate agents don't feel like they're getting treated fairly, because if you're not steering enough people towards their bank, they stop sending you leads, or they kick you out of the program.
Yeah.
Now, I'd get my pants suit off if I told everybody they had to use you, Pat. Now,
I would like it if they did. I would like it if they did. Huh?
Well, so if you got to buy a house and you're using me, you have to use Pat.
Yeah.
That's a big no-no in the real estate.
That's not fair. That's not fair. I mean, that's not fair to give people need a choice. I mean, obviously I'm very competitive rate and fee wise, but especially when you go to a bank, I'll say an independent mortgage bank or a bank, they've got one set of fees. With me, I've got being 100 mortgage broker, I've got 130 different choices, amongst my lenders. But to send it to one bank that's going to give people one choice, it's not fair. It's not fair to the consumer.
Well, and you're sending them to Zillow's bank.
Yeah.
Pretty soon they're going to have their own insurance. They're trying to put together a one-stop shop, and all of them are trying to do this. But they're finding it's a lot harder to coordinate than they think.
Yeah.
Coordinating title and escrow and insurance and the lender, it just can't be done with a mouse yet. Travel agencies, that was easy. You just book a flight, book a hotel room, click, 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 done. Real estate, not there yet.
No. And I think the consumers, these big companies think the consumer is not smart, but they're smart. They realize that, they're just getting, cattle herded into one big company. They want a little bit more customized service. All of a sudden you're calling into an 800 number, with a bank. I mean, I tried calling this one bank the other day, and it, voicemail, and I couldn't get through, and they'll leave a message. And, somebody works with me, they can call me at 8:00 at night and I pick up my cell phone. Boom. So there's a lot to be said about that in terms of, working with an individual person versus, like you said, a big company with insurance and this and that. You're just going to get cattle herded. But,
well, you look back, and we were going to get a new Fed chairman, and that was going to make a difference. Hasn't made a difference at all, has it?
No.
And I think at opposite ends of what Trump wants.
I think, and that goes back to Fed speak, as far as we'll see what happens with the economy. I mean, inflation, just to jump around a little bit, I mean, inflation's been somewhat tapped down, but, they're saying, are they going to raise rates? I think if the Fed raises rates, if they do, who knows if they're going to do it in September, October. I couldn't tell you. And nobody on Wall Street can tell you. Hey, Jackie, nobody can tell you at all. But I have a sneaking suspicion if the Fed does raise rates, that mortgage rates will actually go down.
Huh.
Because I'm not going to get into the weeds, but it's a kind of a counter psychology as far as the market looks ahead. Basically, that's telling the markets we are going to fight inflation. And so, the market's always looking out 3, 5, 6 months ahead. So the fact that if they're doing something, like, okay, we're going to look ahead and see what that's going to do. But in terms of raising the federal fund rate a quarter or half or whatever, I don't know how much that's going to slow, the inflation, because you got oil. Yeah, it will, but how much will it have a direct effect on the inflation rate? I don't really know.
I don't think the rates are going to have that much of an effect on inflation versus oil prices.
Yeah. And
boy, that doesn't look like there's any relief inside anytime soon.
Oh, that's just I'd like to say the word that starts with an S, but S show. But it's I just don't even want to get into it. It's just frustrating. I mean,
but again, it's another year where Zillow comes out and adds yet another revision to their forecast, and so does Redfin, so does everybody, and it underscores. Don't even try at the beginning of the year to tell me what kind of year it's going to be. Remember last year it was going to be 4 to 6 rate cuts.
Yep,
And in
46
March,
rate cuts.
they were going to lower the rate, and just we're not seeing any of that. And
well, what about home price appreciation? 3 to 5%. I mean, we're basically seeing flat home prices for the most part, right?
It's all the majority of our activity in the valley is between $400,000 and $600,000. That's where all the sales are.
Yeah,
and their appreciation is flat to down almost 2%.
Yeah.
In the above that, there's appreciation of 2%, 4%. And
Yeah.
so, but the majority of, and it shows you, it's entry level trying to get in. Affordability, we're not anywhere close to where we need to be, but we're starting to get there. And it's, we are, as consumers, we're in a much bigger hurry than the market is willing to give us.
Yeah.
It's
I totally agree.
I mean, you look at affordability now. Nope.
You look at rates. I mean, look at, I was just looking at rates just to pop back in here. I mean, right now rates, I'm jumping around, obviously, you know me, but 6 3/4, we're sitting at right around 6 3/4. But, the buyer is waiting for rates to get maybe into the high 5s. Well, right now, based on this one lender, the discount points kind of give you a target of how far the bond market's got to go down, in terms of price to get to that 599, the 599, 587. We're looking at almost about 3.5 points. That's 350 basis points that we'd have to see improvement on in the, basically we'd have to see rates, the 10-year treasury, 387, 399. It's just not going to get there. I don't think in the next, I think we're going to be stuck here for a while. I just do not see, you and I have talked about this. I don't see anything that's going to drag us down into the, high 5s, low 6s in an intermediate time frame.
Yeah, it's really complicated to look to see what they're going to do. And then our debt, $40 trillion, $1.1 trillion in interest payments. And so, where interest rates, the demand for a higher rate is there because, the government's soaking up all the bonds. It's just a nightmare scenario. And we haven't been here before. We were in the 40s, but it's a little different scenario now. The 70s, we had the high rates and the high interest rate, and we had high debt, but the debt was not that high. Our debt ratio in 1980 was 48% of GDP. Today we're 122%, I think. Let me show you here. We got 40 trillion debt equals high interest rates, more or less. I don't see this changing for years. I don't either.
No, I mean, I know we're just a bundle of joy, aren't we, in terms of a lot of positive news.
But if it stays in the 6s, and we do have some leveling out of prices and wages increase, I'm talking over time, we're back in the saddle again. Volume will increase, and so it's not. We're still not seeing desperation in the market. I got to sell. We're not seeing that. And until you see that, and how can you have desperation when 60% of the mortgages are below 4%?
Well, that's the thing. Yeah, I get two. I just talked to one of our past clients, Kristen Hahn. She they actually bought another house, and she was she made an interesting point. You and I worked on her deal, and she got 2.25% VA.
Yeah,
and she got just an assumable loan at just recently. That's another story to be had. I know we were talking about assumables, but they're assuming a 3.75. So their combined rate, 2.25, 3.75 is 6%. And she says, I got a neighbor of mine, friend, that our combined rate on our mortgages are less than their rate that they're getting right now on just one mortgage. Huh. So it's crazy. But I mean, there's a lot of things out there. I don't see it. Once again, we've talked about the last year or two about the market just muddling here, and
and you've got more restrictions coming on condos now too, September 1st.
Yeah, we got
go from 10% to 15%.
No, they already were implemented August 3rd.
Really?
Yeah. So basically, they cut out the limited review, because if you could do a limited review, it's rather than a full review on the condo. But now they cut out the limited review, so they have to do a full review. They increase the reserves that they have to hold from 10% to 15%. There's a couple of things they did that were positive, but most of them were cutting the legs out from these condos. I got this one lender that actually does not require an HOA questionnaire. So if I come across any condos, I'm going to probably see what they can do in terms of loan, because they do not require an HOA questionnaire. Which is
so for people who want to sell their condo, when you're hearing this, make sure you start searching around for lenders that can make that task easier.
Yeah, it's not gonna be easy. They're not making it easy, that's for sure.
So,
but
there's a comment here. It says, I think it's sort of quiet desperation out there. Those of us with mortgages that are under 3 to 4% are paid off, probably want to move but can't. That's another type of desperation. They want to move and they can't, but they're staying put.
Yeah. Well, I'm seeing a lot of people that are, like Kristen. I mean, they're 2.25. They're renting their house out. They're getting another mortgage at 3.75, and they're keeping that house as a rental.
Now, I'm encouraged to see that Congress is looking at my idea on reducing capital gains rates. I've been pushing that for a long. Of course, I want them eliminated, but they're going to raise them, the exclusion, 500,000 to 1.3 million, and make it, to where people don't pay capital gains if they move, sell their house. I say, get rid of it permanently, and for investors, give them a 2-year break. Let them offload some of their properties without taking a big tax hit, and give us some inventory out there. And then you look at this housing bill that they passed, that didn't do crap.
No.
And the only thing it offers is some relief on regulations for builders. But it's not requiring builders to offload properties. It's not putting any restrictions on the number of homes you can own. It's just, no wonder it had bipartisan approval, because there was no teeth to it.
Yeah.
You read it and go, what? This was a waste of time.
Well, on that topic too, I was talking to Randy, my LO, and actually a couple of things we touched about, talking about the cancellations. He said he counted out the cancellations he's had. He's had 41 contracts canceled because of the Binzer this year. 41.
That's insane.
Yeah, and he's closed about 150 loans through this month. But so you figure that number out. But it's the market is just Vanilla Ice.
Yeah, it has been a long time.
Been a long time. But
I went and got my truck worked on. I had to get my air conditioning fixed again. And I walk in, and the mechanic, I really like him. He looks at me and goes, "Whoa, Rick, what's happened? You've lost a lot of weight." I said, "Yeah, it's a long story." So, he goes, "Yeah, you look a little different today."
You said you lost 63 pounds?
Somewhere around there, yeah, since the first part of January.
That's my left leg.
Yeah. Yeah, it's insane. It's just insane. My brother came down to help when I got out of rehab. And I said, now when you see me, I'm a shell of my former self, so don't go into shock. And he couldn't hide it on his face.
Yeah.
He saw me like, so.
I'm telling you, you've done a hell of a lot better since I saw you 4th of July weekend. I didn't want to say anything, but you didn't look good.
Yeah, there were a lot of people who didn't think I was going to get out.
No. And, I mean, you're a hell of a trooper, I can tell you that, buddy.
You just kind of take it, you just, oh, well, let's get through this and move on. And the nice thing is, because of the team that we've got, it didn't hurt business at all.
Yeah.
I was still able to send messages to Jessica and Jackie and Ruby and you, and people would reach out to me and I say, hey, let me send you over here. And so it didn't hurt things. I mean, I pretty much coordinate things from here anyway. And it did slow me down when it comes to gathering data. And I know when I finally got out of there, I thought, man, what am I going to see? Because I've been removed from it for so long. And then I pulled it out and go, wow, it's not as alarming as I thought it was going to be. Hey, there's a long timer from 2020.
Oktoberfest. I remember it. I remember it. Yeah.
Holy cow.
It's
That's
amazing
when
how
we
you
first
remember some
got
of these.
started trying to figure out how to do this stuff.
Yeah. I mean, I remember. It's amazing how you remember people behind their names or
Yeah.
behind their whatever their Danelle Ice, and we had Deb. Yeah, he's ultra marathon runner. No kidding.
Yeah. Well, I'm just learning how to walk fast now. So I went to the Guess Who concert, Lisa and I did on the other night. We went down to that theater. It's downtown. I had to park fifth floor of the parking garage, take an elevator down, and then walk up all these stairs. Boy, I got my workout. By the time I got to my seat to watch the show, I'm like, so, all kinds of water. And,
I talked to a lot of people that missed you. I mean, I know I missed doing the shows with you every other week or so, but hopefully we can get back and doing them. Obviously, like I said, nothing has really changed that much the last couple of months since you've been in bedridden, so to speak. I mean,
yeah, I still have a lot of stuff to go through. Medically, I don't expect anything to knock me on my back, but it's nice to be back in the studio and get it done. It's versus pulling out a iPhone or a GoPro camera or something, because I need to dive into the numbers, and now Cromford is changing their format, and I'm like, don't do that to me,
Oh God, are they?
Thank you. Yeah, they're going to go to WordPress pretty soon here, and it's nothing alarming, but it's more like a blog post. A lot of information, but for agents that are out there, take a look at it. Tell me what you think. It's it's supposed to give us more access to more data, and so that'll be good. But all the data you're pulling up now is just not changing. I mean, I'll listen to the news and I'll hear the panic that's going on with what Japan's doing with their bonds and treasuries, and then I look at real estate going, it doesn't look like anybody cares.
Well, I mean, if you think about it, somebody that's gotten married, or somebody died, or they got to move, or they got to increase family. I mean, they got to do what they got to do.
Yeah,
they got to do what they got to do. And I know in the short term they want to try to get the best rate that they can. I mean, these rates are not going to magically go down. Matter of fact, I was watching our Jeb Smith, the one guy that over in California, his mortgage guy, and one guy asked him, when do you see rates getting down to 5%? He's like, I don't see it for quite some time.
Yeah, if at all.
I mean, I think there's a couple of people I had talked to back last year when rates were 5.87, 5.99. I said, hey, you ought to jump on this. And I had a handful of people like, well, we're gonna wait till rates get a little bit lower. And I would have saved. I know one guy I would have saved probably about $750 a month, because he had a pretty decent sized mortgage. And I talked to him a couple of weeks ago, and he's like, well, I'm just gonna wait for rates to go down. You had that opportunity. That's when you see a bird in the hand is better than two in the bush. I mean, if rates do go down into I see them. It would be nice to see them get into the mid to high fives. I think that would be kind of a sweet spot, but for everything. But I think based on the rates that I pulled up here a couple minutes ago, it's going to take a lot of work, a lot of digging to get into the mid to high fives again.
Yeah, it's impossible to predict. I always enjoy looking at December. I call it predicting season.
Yeah, I know.
What's going to be interesting now, you're going to get this closeout pricing with new builds as we get towards the end of the year. What's that going to look like? They're still offering rates in the threes and giving away everything. They're really pulling back on their permits. And so we'll see what it's like when they start to dump their year-end stock. And
I was listening
your
to this
eyes on that.
Oh yeah, I was listening to this one gentleman, Brian Hale. He does a weekly roadmap for mortgage people and actually real estate agents. It's a really good. People ought to look him up. Brian Hale weekly roadmap. He gives a lot of good information. He's got some good guest speakers, but he does consulting for builders, and he said, builders are still offering 3.99, but they're not knocking the doors down. It's not an interest rate problem. It's a consumer confidence problem. All the noise that's going on with the war and the oil, and because he said builders are offering 3.99, but they're not knocking the doors down at 3.99. So that says a lot about the overall angst in the market. And the people I'm seeing buying or doing whatever, they just have to do it or they want to do it. Regardless of all the noise that's out there, they're just moving forward.
Well, as we go forward, I think the thing to watch is we know the debt's bad. We know the interest rates are high, and just watch the price of oil. If the price of oil starts coming down, we'll start seeing some gradual improvements in other metrics. And Oktoberfest here, it's got a comment that says, I don't know, I think we may enter a financial repression stage, 4 trillion in debt, 1.4 trillion in annual debt, Scott Bessent in Treasury buying debt. It's a mess. It's a wild bowl of soup as they try to figure it out. And, the Treasury and the Feds are going to be at odds here pretty soon. So just grab the popcorn. I mean, it's
yeah, but it's the best. I think. Correct me if I'm wrong. What was the amount of bonds that they were buying? 4 billion. Was it 4 billion?
I think so.
But if you go back into the my agency MBS purchasing chart here, I mean back in 21, I think it was 4 billion. Correct me if I'm wrong on that. They went from 2 to 4 billion, I think, in the Treasury market. Yeah, 4 billion. That was a minute. But look, if you look at in back in 21, every month we were buying 98 billion, 103 billion, 98 billion every month, 107 billion, 106 billion. I mean, every month we were doing hundreds of billions of dollars. That's what was driving rates down.
Yeah.
We're talking hundreds of billions of dollars every month. And so what they're doing right now is basically just repositioning. They're selling short-term bonds to buy long-term bonds. Basically they're just selling one group and buying another group. So that's just really just kind of a accounting thing, probably, obviously with rates. But, you look basically you back in 21, 22, and then obviously back in May, they went from, it's just interesting watching this chart. It's like in October of 21, they were buying $106 billion, November 96 billion, December 84 billion, January 70 billion. And then by about April, 40 billion. By May of 22, 34 billion. By June, 13 billion. And by August, it was 7 billion. So, and then basically September of 22, they said they're not doing any type of purchases. So that's when rates went up, obviously. Yeah. So what they're doing right now is basically a grain of sand on the beach.
Yeah.
So I don't know what, but I think, there's got to be some talk behind the scenes of what the hell's going on. Because, everything is just a damn circus out there right now. So, and I feel, like you said, once a minute, I said in the beginning, I feel bad for the buyer or the seller right now in this market. And that's why we're seeing such a bifurcated market. You see some people move along, but then you got the buyer it's like, okay, we're going to buy regardless of all this noise. But then you get that buyer that's listening to every daily news and they're just knocking them off their rocking chair.
Well, the thing is when you look at some of the headlines, all the news is national. Then you go and drill down and go, wow, we're not anywhere near that.
Yeah, I know.
Sales are, and you really got to watch percentages too. When they start saying inventory's up 30%, well, so what? Especially on foreclosures. The numbers that they're giving you on foreclosures on a percentage basis don't mean anything.
Yeah.
They're up 35%. Okay, that's 10 houses. And Oktoberfest, I think they're going to buy a hell of a lot more than 4 billion. They're going to reach a point where they got to jump in and do something. So, Pat said it's a circus, and we are the clowns.
It's just they got to get the spending. They got to get their spending under control. It's just kind of ridiculous how they're saying they're going to. We had those Doge stuff. It's just there's a lot of mixed signals out there. And like you said, looking at the market, the real estate market, if somebody's looking to buy, at least we're not running up, 2 or 3% a month on home prices. So, that people say it's a bad market. Well, you want this market, as I've said a couple months ago, you want this market, or do you want a market that you've got 30 different offers going on a house and you got to outbid it by $50,000?
Yeah, this is a much more comfortable market. There's no doubt.
Yeah.
And I think it's going to continue. It's probably going to get better as we get into the latter part of 2027. But this fall is not going to see a huge increase in sales. And if we don't, it's still, we've got enough sales going on to keep people busy. It's not where a lot of people would like to see it, but it's not horrible.
No.
And
no.
so if you're going to list, you can find a buyer. You just got to be realistic in your pricing.
What I've been doing a lot of, mentioned to people too, that people are at 2.25%, 3%. If they got a 250, 300,000, there's still a lot of equity out there. I've been getting calls on HELOCs as far as home equity lines of credit, because I was running some numbers. If you're at $300,000 at 3%, and you take out $50,000 or $75,000, at say, I've got HELOC programs for self-employed people. It's amazing that HELOC programs that have come out on the broker side here the last couple of years. You don't have to go to a credit union or bank to get a credit, a HELOC. We've been offering. I've got like 8 or 9 different lenders that do self-employed people that aren't showing any taxes. We can use bank statements. I've got HELOCs for investment properties, second homes. I mean, I've got this one. If people can do full documentation, income documentation, I've got seconds mortgages on second homes that are in the high 6s, low 7% range. So if you take a second mortgage out, you got to look at your blended rate. I was running some numbers. I got 300,000 if they're at 3.5% and they took off 50 or 60, $70,000, their blended rate is still around 4%.
Yeah.
4.125. So that's why I've been getting some calls on is HELOCs. People trying to tap into, they might have $200,000, $300,000, $500,000 that they might have $50,000 or $75,000 or $100,000 in credit cards that, they'd rather pay 7.5 or 8% versus 28, 25, 28%. So that's been kind of a move about it. So,
well, Pat, we're going to cut her short here. You have a super weekend.
Yep.
And hopefully we'll be back next week and we'll do this again.
Let's get this rock and rolling. You're out of bed. You're not tied up talking to nurses at the rehab center. Let's do this. Let's get back on a roll here. So
I turned into kind of a grumpy
to get back on it. Huh?
I turned into a grumpy grump there for a while. There was this one young nurse, and they were just obsessed with me not falling out of bed. They got these baby gates up. It's like, so this nurse comes in. She literally wakes me up at 1 o'clock in the morning, and I'm sleeping kind of at an angle. I'm not sleeping on the bed like this. I'm kind of at an angle, right? She wakes me up. She goes, "Sir, can you move over a little bit to the center of the bed?" I just opened up my eyes and I said, "No, I'm good." And I closed them.
Grumpy Rick.
Grumpy Rick. Yeah. I said, "No, I'm good." So I'm not going to fall out of bed. So
yeah,
that's pretty fun. So, all right, everybody. Thanks for joining us. Good to see you,
everybody.
Old timers out there. So,
all right, buddy. Talk to you soon, everybody.